Hey traders, checking out of the stock market today. Commodities started the week with a strong push up. We had bulls attempting to bounce in the stock world, but hourly downtrends keeping control. I'll show you what we're watching as we start the week. Before we get to the charts, we've got another free ebook. This one's about the TCG Backburner strategy. You can use it for both bounce plays coming off of a really strong market. You can use it for going short coming off of a weak market. And in the current market environment, we have a bunch of bears in the tech sector, the semiconductors. We got a bunch of bulls in commodities and other individual sectors. So worth checking this out. Link is in the description and in the comments of this video. Free. So what we're watching in the short term is the S&P 500 and the Nasdaq both had daily bear flags that confirmed to start this week. But as of right now, we're going to say that these are daily bear flags that are lacking follow through. If we're going to continue to say that they are lacking follow through for bears, we have to see some trend changes on some longer term timeframes. So looking at the 4-hour chart here for the S&P 500, we are seeing an after hours move, testing resistance. Essentially, SPY bulls were able to confirm an hourly trend change today, but the Nasdaq failed, so the S&P 500 bull break saw zero follow through. But again, after hours, we're up a bit here, testing this resistance level. What I need to see from here is the futures chart confirm a 4-hour trend change. So the goal for the bulls is to see an overnight bull break, create the space so that if we set a lower high compared to 44.62, that we have space for a trend change to try and take place. Again, the burden is on the bulls to prove to us that this is a daily bear flag with no follow through. And the Nasdaq is the same thing. So the bounce into the end of last week was weak. We broke to a lower low, but a bullish reversal candle on the daily. Hourly equilibrium here after hours, high of the day, low of the day, double top, higher low, still under resistance. If we break this bull overnight, we zoom out, we watch 4-hour resistance. Anything under 14,299 is a lower high, must confirm a 4-hour trend change for follow through. So bulls attempting a bullish reversal candle. We have the bullish reversal candle on the daily charts, but follow through is what we are missing. And QQQ has not confirmed an hourly higher low and higher high during regular trading hours in 9 days. It's a very long time to go without an uptrend. So keep it simple. If we do not see a confirmed hourly uptrend on QQQ, nothing changes. If we do, then we zoom out and look at our futures 4-hour time frame as the next level. I should say the next time frame that needs to see that trend change. Again, we are still looking for weekly higher lows. At this point, it's just more of a pullback than bulls wanted to see. And there's the possibility where if we were to set a weekly higher low, we would then be in a tightening range into the May FOMC, first week of May. But no weekly higher low without bulls proving to us that it is shaping up. So burden on bulls. One thing I want to point out, I've done it so many times now, but Bitcoin can give us clues to the broader market. Bitcoin is looking for a weekly higher low. It was a daily bear flag that confirmed to start the week, just like the Nasdaq, just like the S&P 500. Look at the bull move that took place on Bitcoin today on the 5-minute time frame. Not right there, right here. This 10-minute move started at 1:05 p.m. So we confirm the daily bear flag, and then a bull move takes place at 1:05 p.m. Eastern. Look at QQQ. What was happening at 1:05 p.m. Eastern? So we saw a little bull move. Then look what happened. This candle was 30 minutes, 25 minutes after Bitcoin had a very similar big spike up. So now what I'm watching for is, can the Bitcoin bulls break the daily lower high pattern by getting over 41.6 thousand here to shape up the weekly higher low and to confirm to us that this daily bear flag has zero follow through. I'm going to do a crypto live stream here in an hour, 5:30 p.m. Eastern. So I'll talk a lot more about that. But again, just little clues. And definitely Bitcoin in the past has shifted my perspective on whether I'm looking bullish or bearish, and it has helped my trading, not in any, meaningful, magnificent way, but just in a few little trades that I've taken. There are clues that have been useful. And one of them was weeks ago when I traded NIO bullish. I'm just trying to remember when that was. So a long time ago. I think it was back here. Yeah, that was all the way back in early February. But due to relative Bitcoin strength, it helped me long NIO here for another little leg up. So again, just something to keep an eye on. If you're overwhelmed, you don't want to keep an eye on it. But if you've got your routine down, if you've got your screens up, if you're comfortable with trading, it's worth keeping an eye on. The semiconductors, so the fear low of 237.32 broke, but only by 20 some cents. So we'll call that a double bottom. The key daily resistance for me for a ton of individual names, Tuesday and Thursday of last week, many names have a little double top. Some names have the higher high on Tuesday. Some names have the higher level on Thursday. Whichever one is higher, Tuesday or Thursday, that's the more important one. So the simple statement for SMH is if we are under 248.11, the bears have complete control on the daily. If we get over that level, it will be notable. Because to end last week, we had a setup where we were heading into this previous weekend in two very different ways. We were either going to see an inside bar bull break and shaping up the weekly higher lows, or an inside bar bear break, which is what we got, and a close at the low of the week. Those are two very different scenarios, and the bears won Thursday in a big way. And it was QQQ again, where QQQ right out of the gate, top fishing rejection, pull back under resistance by 46 cents. Bears control the entire day. So for QQQ, that key level for me is 347.69. Have to break that level on the daily for bulls to shift some momentum and shape up weekly higher lows. Burden on bulls. But what did stand out today, semiconductors confirmed an hourly trend change. And here we are after hours at the high of the day, and correlations are key here. So when I'm looking at QQQ divided by SPY, I can see that the QQQ led the bulls on the way up for that 3-week bull move. We led the bears on the way down for the last 2-3 weeks, however, 2 weeks of pullback. If we're going to set a weekly high or low, in my opinion, we have to see QQQ and tech leading for that weekly high or low. I'm going to need that if I'm going to see confidence, because we just saw a month worth of examples saying this is the relationship right now, and this is how the moves are being dictated. So I just put out a video over the weekend for TheChartGuys members. Check out the educational videos section, an in-depth video about these correlations, but I'm watching very closely, because if QQQ divided by SPY can start to see strength, that's going to increase my confidence that a weekly higher low is forming. Likewise, we know semiconductors have been weaker than QQQ. So we know QQQ has been weaker than SPY. Semiconductors are weaker than QQQ. So looking at NVDA divided by QQQ shows us the most significant bullish day for NVDA compared to QQQ in 3 weeks. So again, one day doesn't mean anything, but this one day is enough for me to say, okay, I'm paying attention now, because we have been extremely bearish compared to QQQ for 3 weeks, and today that was different. So my question is, can this be different for more than just a day? Can we see a bounce where the names that have led on the way up and then led on the way down, can they start leading on the way up again? So I need to see semiconductors leading. Ideally, in an ideal world, if I'm going to have confidence in bulls weekly higher lows, I need semiconductors leading QQQ. I need QQQ leading the S&P 500. So those are things that I'm watching for this week. Tesla, sideways, trying to fend off a daily bear flag. And I am not going to hold a position, exited a swing position today, not going to hold for earnings. Was contemplating it, and in the end, it's just a gamble. It's like, why would I gamble? I have not played this game that way in 8, 10, 12, however many years. Why would I start now? So just locking in the remainder, I think it was 40% left of the swing position from the, where did I enter? The 8, somewhere around here, 840s. And again, if I would be still in this position if it weren't for earnings. But earnings are going to dictate whether a weekly high or low is shaping up or not. And those are Wednesday after hours. XLV rolled over. So healthcare sector was our lead bull major sector, up at all-time highs. A big pullback on the daily created the space for a lower high and lower low. So now healthcare is seeing weekly consolidation after a bull move for a month. We got a lot of space for a weekly high or low to form. But just making note of the shift. We'll keep an eye on this uptrending resistance line as well now. But with that, there are other names that have a similar daily setup that have been very strong at all-time highs. So cost is one of them. Been talking about cost the last few days, looking for this bear play for the daily lower high. So again, I think I talked about it in a broader market video where this pullback percentage-wise is way bigger than this, bigger than this, bigger than this. And so it stands out to us because it's bigger. It creates the space for the daily lower high to be the result of that bounce. So if cost bears break 578.76, the daily downtrend confirms and weekly consolidation is underway. And again, it's just knowing, okay, we've been going up for 7 weeks in a row and we need healthy weekly consolidation at some point. I make this trade often in both directions, usually when I'm looking for a longer term, most likely scenario. So if I'm looking for an hourly lower high, and this is the 5-minute time frame or the 2-minute time frame, so many of my trades say, okay, that's a big enough pullback. I've got a level to play off of. There goes my stop. And I'm looking for that hourly consolidation to take place. This is the daily and the weekly, but this style of trade is definitely one of my bread and butter styles. Same thing with bounces. If I miss, if we see a 5-minute bounce that's big, we're looking for an hourly high or low. We get a 5-minute bounce. I scout the space for the 5-minute higher low to shape up the trend change for the hourly higher low to be set. 15-minute consolidation, I look for a 2-minute bull move that's big enough to scout a 2-minute higher low for the 2-minute trend change to indicate the 15-minute higher low is being set. If that's making your head spin, it will make sense eventually. These are how these time frames overlap and interact with each other. And this is just one style of how a trend on a shorter term time frame sets up a most likely scenario on a longer term time frame. Now, in this instance, I am less confident in the most likely longer term scenario because I would be much more confident if we're just scouting a weekly lower high into a pullback as opposed to blue sky breakout all-time highs weekly consolidation. So it's not ideal in that regard, but again, the setup is clear enough. And at this point, rather than going off of 612 resistance, I could scale in on the bounce and then I'm using 612 as a stop. That's way too much risk. That stop is way too far away. As soon as we break the low of Thursday, 596.28 then becomes the most important resistance level to me. And that's $16 closer, way less risk. Why is that now the most important resistance? Because if I'm going to be right, then that's our lower high and we're going to roll over. And if I'm going to be wrong, then we hold support and break that resistance and go right back up to test the all-time high and I stop out. But I have to have that risk smaller than using the level that we are coming off of. Financial sector still rolling through earnings. BAC and SCHW had earnings today and bulls bought the gap down open, but bears are still in control. We have an hourly downtrend. We would need to see the bulls break 37.28 to confirm an hourly uptrend. And then we would look to daily resistance from Thursday, 37.49. Pretty much if we can get over daily EMA 12, it'll be the first indication that a weekly higher low is potentially forming. And again, if we do see bulls prove something to us this week and shape up weekly higher lows, it might be a slow and boring next few weeks. Because if we do see a weekly bounce and then a tightening range, FOMC first week of May will then be a major factor. But with a big time bounce and a big time pullback like so many of our major sectors are seeing, that's when we scout for equilibriums to be the most likely scenario. Doesn't happen all the time because I would have been looking for one here, which we didn't get. But keeping an eye out for it. IWM, daily bear flag is on the table. Bulls are trying to negate it. If they're going to negate it, we need an hourly trend change back to the bulls. High of today would need to break. If we were to get that, need to get over 202.37, which would technically be a daily trend change back to the bulls. So if we can hold 195.88 and break 202.37, we are then in a daily uptrend and our weekly higher low has been set. But the burden's on the bulls. Again, all these charts, burden is on the bulls to prove something to us. They failed to do so last week. They came close, but they failed on Thursday. Biotech sector, lead bear sector today, big bear candle. Daily bear flag confirming, and we're really just looking down at the fear lows. 82.37, 80.34. We are in a weekly, daily, hourly downtrend. And right now, we just swapped semiconductors. Well, semiconductors are still right near their fear lows as well. But biotech sector is definitely rushing to the front of the bear sector line after today. Commodities. So gold and silver creating some upper wicks here. And again, what I'm watching for, do we have an inverse relationship with stocks? We did when Ukraine news was dominating the headlines. It faded a good bit. But if we were to see QQQ, semiconductors, if we see that bounce on the daily, does that mean money is going to be leaving commodities? And keeping an eye on the big upper wick from today's candle, keeping an eye on the potential for weekly tightening ranges. Again, if we see QQQ give us a weekly higher low and tighten up, does that mean that gold and silver are going to give us a weekly lower high and tighten up? I don't know, but that's what I'm looking for on a daily basis, observing how these names are trading relative to each other. So keeping an eye on that possibility for both gold and silver, but would need to confirm 4-hour downtrends for that to potentially start shaping up. Gold miners, profit-taking day today. Stair-step pattern, higher low every day, 7 days. If we break the low of today, tomorrow, daily consolidation underway. Anything above 37.80 is a daily higher low. A lot of commodity names are scouting first hourly oversold conditions, looking for a daily higher low. So miners, I'll be very interested to see if we get hourly oversold conditions, how aggressively are bulls buying that dip? Do I want to add to my position? Maybe. If bulls do aggressively buy an hourly higher low and we form a healthy daily higher low, I will want to add. I will have a closer stop level for the added aggressive position than I will for my regular position, but I'm watching for it. And CCJ, uranium, another commodity related name, daily consolidation underway. We came close to hourly oversold today, didn't quite get there. I did nibble a starter entry here. And again, it's just scaling in, looking for a daily higher low. EMA 12 still support. If we get to hourly oversold, I'll add a second position. If we confirm an hourly trend change to the bulls, I'll add a second position. Once we set the daily higher low, that's what my stop loss is going to be based off of, because we've been setting daily higher lows for a couple months at this point. And if we lose the daily higher lows, I would want to be cash and patiently observing weekly consolidation, which again could be shaping up. Gotta take it one day at a time. Natural gas has been absolutely on fire, but an upper wick forming here, hourly, watching for a tightening range. So we're going to look for an hourly higher low, anything above 745. This is the kind of the trade that I just highlighted on the daily charts for grocery names. This would be the trade where I don't want to step in front of this speeding train, that bull rocket. So I see this pullback and say, okay, that's a big enough pullback that I can anticipate an hourly lower high is the most likely result of the next bounce. I can then observe. I can then use the shorter term time frames. Let's say we regain a 5-minute uptrend and the hourly bounce starts. And the 5-minute uptrend is then lost. That top needs to be our hourly lower high. That level is my stop loss. And then I hope to confirm the hourly downtrend to shape up potential daily consolidation. We're watching for a climax top and then tons of space for a daily higher low. We'll be watching backburners here. So again, check out that free ebook. But Backburner, first hourly oversold will certainly be on the table for natural gas. But first things first, aggressive bears scouting an hourly lower high to be the result of the next bounce. Be very careful with natural gas. I wouldn't trade natural gas in anything where my hands are tied overnight. You're either trading it on futures, where you can trade it the entire time, or you're day trading stocks. But holding overnight any stocks that trade based off natural gas is just asking for pain. All right, hope you had a good long weekend. Hope you had a good trading day. Definitely started out as a slow day. We did get some good volatility there in the middle of the day. And I didn't do a whole lot of active trading, more of a swing trade mindset this week. Really just watching, can we set weekly higher lows? Do commodities stay strong on their daily charts? Can we set weekly higher lows in tech, semiconductors, What else? That's about it. Do we see weekly consolidation in these grocery names? It's pretty much what I'm watching for the week. Do good things. See you tomorrow. Rhubarb's getting big and flowering. And we got the second year asparagus flowering as well. Gonna do more raised bed stuff, taking the covers off, doing a little bit of weeding, adding a little bit of nutrients and some topsoil, and then covering it up with dried leaves to retain moisture and to try and combat weeds. I get a ton of these little sprouts here just because I don't do a good job of getting all the plants in the summer and fall before they put their seeds out everywhere. But that just means I have more weeding to do. The beds are prepped, and now we're going to put some leaves on top to retain moisture and stamp out some weeds. The greenhouse is overgrown and flowering. These are crimson clover and there's this collard greens that have gone to flower. Kale hasn't done so yet. These are serviceberry flowers. You can see all the purple, and there's a ton of bumblebees out. And the figs are starting to put out their leaves too. They're usually one of the last. Might be a little bit early this year.